We have Nooresh and on the charts and Anshul Saigal on fundamentals to talk more about markets. Gentlemen, afternoon. Nooresh, I'll come to you first. The way last hour of trade is the setup looking, one should be squaring off profitable long positions, should we, or should we risk carrying them off? And especially Bank Nifty and is 200 points away, 30 points is what? Nifty is away from all-time high. How does the setup look beyond that in April series?
Structurally, when the index is making new all-time highs, the bias should be to ride on to positions. We are getting towards all-time highs. The only concern is today we are not seeing a similar uptick in the small cap and the mid cap indices. But the bias remains positive. Banks look pretty interesting because they've been a major underperformer for a really long time now. And the Bank Nifty has crossed about 47,000 levels. Some of the momentum stocks are very clear. You're seeing ICICI Bank take leadership, come to a new all-time high. You have HDFC Bank trying to come to that 1460, 1470 levels. Kotak Bank has crossed the recent swing highs. So the bias is banks could lead going forward. So continue to ride on to the position and keep a trailing stop loss.
Good moves across the board as far as the public sector banks are concerned as well. A Bank of Maharashtra, UCO Bank, Punjab Sind Bank, all of these smaller names are also perking up as we speak. So a lot of vibrancy, not only in the large caps. Of course, bulk of the move is happening there, but don't forget the small cap and the mid cap indices too are doing their bit. And individual names, take a look at VIP now, 16% surge no less. We started off with a gain of around 8 to 9% and consistently from there on, there's a buying which is happening and it continues into the last hour of trade as well. Aegis Logistics as well, wherein there was an initiation by IFL. They are talking about a target price of 500 rupees and that stock is in focus. We're also watching out for Latent View. That acquisition that they have done has been taken very well by the street. There's a move of 12% on Latent View as well. So clearly these individual names and then Century Textiles and other names of the world. But what are the underperformers then? Shoppers Stop, it's down 4%. Safari, while VIP is doing very well, Safari is actually seeing a trade out. There's a 4% cut there. Blue Star, TeamLease, Torrent Power, these are some of the other names. But taking it across to Anshul as well. Anshul, what's your take on VIP if you've been tracking this one and then Safari in comparison as a peer? Any view here?
Hi, Anisha. In this space, actually, what really played out is the Safari business was built out of, it was sort of an offshoot of VIP. The gentleman who used to run VIP, he quit and he started his own firm. And given that he had so much understanding of the business, he's been able to do a commendable job in building Safari. On the other hand, in the incumbent company, there have been issues on consistency of management, as also on continuity of business, and that has led to some amount of market share having moved to the new company. This space overall has so much room to grow that it has room for everyone to grow, except that VIP has been a little bit of a laggard in managing managerial issues. If they get those issues in place, clearly this business also is quite a strong business and has quite a bit of room to grow, this company as well. So I think that positive on this space, just because of managerial issues, one company is lagging over the other. But overall, the opportunity size is quite huge.
Right. All right. CA Rudramurthy is also joining us. Rudra, good afternoon. There's a big breakout happening in Nifty and Bank Nifty. I want to talk about Bank Nifty. As we were discussing in the morning as well, that parts of Bank Nifty were quiet last few days. And that's why perhaps, there was a flat line like HDFC, even SBI for that matter. Do you think these two, or even Kotak has come back in style, could be a big area to bet on for the new series?
Definitely, yes, Ajay. I am confirming with clarity that yes, all the news, whatever we were waiting for in terms of the tax, the March quarter tax, advance tax payments, and whether you wanted to see the US markets GDP data, or you wanted to see Fed decision on interest rate, all the things which happened from regulators, in fact, of the SEBI talking about the market froth, all that is already there now in the price. And for me, this is a great opportunity even now to enter on the long side, and especially banks can definitely do good. And specifically, you were talking about private banks. Yes, my top two picks picks from private bank at current level will be both HDFC Bank and Kotak Bank. These are my top 2 bets. But let me put my neck out and tell the April series or the new series which we will be starting from the next week will see a very, very big up move. In fact, the next 2 weeks and the next 2 months till election, we will see an up move which was very similar to what we saw from Deepavali till February. The big move what Nifty and Bank Nifty and even mid and small cap saw, that kind of a move we will see in next 2 months till the election results. I'm not bullish but super bullish on market, and for me PSUs will be the best sector, and the current correction you have to use for buying good quality PSU stocks. The rally is still not over and we are yet to even see furthermore big up move in PSU stock. Especially I like from banking, SBI, Punjab National Bank and Canara Bank. So you were talking about private bank. No doubt HDFC and Kotak are the best, but I will still bet more on PSU Bank where my choice is SBI, PNB and I'll be looking at Canara Bank. However, other than this, look at power themes. Stocks like NTPC, Power Grid, very, very attractive even at current market price. I also like metals, especially in the Tata Steel and SAIL looks very, very good. And also for me, Tata Power is another great stock. NMDC still lot of space left. Biocon looks very, very attractive. This is a market to buy, and all the stock names I've already given.
Absolutely. Anshul, just want to pick up on that point. I mean, because, you know, there clearly seems to be a little bit of a dichotomy when it comes to PSBs and, of course, large cap banks. Which side would you tilt towards? You think the private banking names, that too the larger ones, which haven't participated in the previous leg of the rally, you think they have scope for outperformance as opposed to PSBs?
Hi, Aisha. You see, if you look at the numbers on PSBs versus the private sector banks, on growth numbers, on ROE numbers, as also on valuation numbers, PSBs look more attractive. While public sector banks trade at about 1 to 1.5 times book, on price to earnings basis, 5 to 10 times price to earnings. On ROE basis, there the outlook for ROEs over the next 1 to 2 years is that PSBs will be in the range of 15 to 16%, which is where the private sector banks are as well. On growth, 15 to 20% earnings growth. And again, private sector banks are in similar range. Now, if valuations are materially attractive as compared to private sector banks, then in absolute return terms, PSU banks should deliver better returns as compared to private sector banks. Of course, you know, if you want to prevent downsides, prevent volatility, then clearly private sector banks, larger ones, are the place to hide. But if you're looking for outsized absolute returns, then over the next 1 to 2 years, I think that even now PSPs offer a better opportunity.
Short break on that note. 22,500 is done on the Nifty. I'll come back and discuss pharma with you, Anshul. There's a name which you know people avoided usually, but some marquee guys have come in that pharma name, and even your earlier favorite Piramal Pharma is blasting away today. We'll discuss these two stocks when we return this after a short break. Anshul, I want to discuss Piramal Pharma, which is back at 130 or thereabout, and there are some very interesting names which have come in walk hard. Do you track the business models totally from the business model point of view of these two companies?
I do, Ajay. I've looked at both companies in the past, and in pharma in general, the story has been that 2014 onwards, we witnessed extra activity from US FDA in controlling production from India. And in this period, Indian companies were adding capacity, which was underutilized. You could say that they were setting up capacities for the US market, somewhat like a Mercedes car. But they were manufacturing Maruti 800s from these facilities. So really, the margins were much lower than what the optimum margins from these facilities could be. And as a result, you saw a derating in pharma across the board. What we've seen of late is that extra bit of activity easing off because of issues on pricing within the country, that is in US. And as a result, you've seen pharma companies expanding ROEs and margins also expanding, and that leading to multiples, price to earnings multiples going up. Many of these companies have broken through to all-time highs. The two names that you've taken are far from all-time highs, while their business models, both of theirs, are actually improving. I'm not recommending a buy or anything. I'm just saying that the operations of both these companies are improving quite tremendously. If you look at Wockhardt, there were really two key issues. They needed capital for the novel molecule which they were developing. And the outlook on that novel molecule was that it can generate outsized revenues for the company over the coming few years. And this molecule was, I think, in phase 3, if my memory serves me right, and it was on the verge of clearing phase 3 trials. Now, they needed capital to do this, and that was the constraining factor. It looks like with this round of capital raise, they may be sufficiently capitalized to fund this requirement. Secondly, they had an underutilized facility, an injectable facility overseas, where again they've got third parties to come in and basically they've tied up with third parties where they're utilizing this facility as a outsourced supplier for these third parties. Both these things mean that their capital utilization will become better. And I think the investors who have come in have bet on exactly this aspect on this company. So that's really what is playing out here in Wockhardt.
Return ratios to get better. That's the take coming in on Wockhardt. Thanks so much, Anshul, for making time and speaking with us today. If you like this video, then like, share and subscribe to ET Now.